social inflation to capacity concerns, insuring nonprofits these days is a bit of a challenge, to say the least. I'm John Weber for Best Review Magazine. I'm speaking today with Paul Siragusa. Paul is Vice President of Underwriting for Philadelphia Insurance Company's Human Services Division. Paul, thank you so much for taking the time to speak with us today.
Good to see you, John.
Paul, what are the biggest issues facing nonprofit insurance these days?
Well, some of the biggest issues from our perspective are we're starting to see a good deal of impacts from the recent legislation on the availability of insurance coverage in the marketplace, specifically for abuse and molestation coverage. So all of the social inflation and the media coverage of these new bills and laws that have been passed in many of these states have really brought abuse and molestation issues into the limelight. We're starting to see jury verdicts that are far in excess of what we used to encounter in this space. There's a real apparent devaluation of money in the public eye from our perspective. You hear more and more about billion-dollar jury verdicts when $1 million used to be a large verdict, that sort of thing. So the other thing that this legislation is really leading to is a problem with latency of claims. By extending the statute of limitations, now people who are abused can come forward 20, 30, 40 years later in some cases with an open window, look-back window in many of these states. So as you can imagine, it's difficult for an insurer to defend a case for something that happened 20 or 30 years ago. It's also very difficult for insureds to produce any kind of viable records of what their operations were or who was employed 20 or 30 years ago. So kind of the resulting effect in the marketplace that we're seeing is a real reduction in capacity.
Can you tell us a little bit more about the capacity concerns?
We're definitely seeing decreased capacity in the industry for both umbrella and high excess limit programs from both on the part of both the reinsurers and the primary carriers. I know PHLY and a number of their peers are no longer offering very high limit umbrella type programs. We've also seen restrictions based on high hazard exposure and also the legal venue, some of these judicial hellholes and hazardous legal environments. The reinsurers that we deal with for one-off placements have expressed an interest in putting out less limits than they had in the past, when we used to be able to secure either $5 or $10 million of reinsurance participation on a particular account. We're starting to see somewhere in the neighborhood of $2.5 to $5 million in participation instead. And we're also starting to see more layered excess deals where it's necessary to get more carriers involved in filling out a schedule.
What are your suggestions for agents in facing this challenging market?
From my perspective, I would say the biggest issue that agents need to face is really getting out ahead of informing their clients of the lack of availability of coverage, and also just educating them in general on the nature of a hard market and the fact that prices are really firming, in addition to the fact that the capacity is dwindling. From our perspective, the greatest source of friction that we see between agents and their clients is that they weren't properly prepared for the news. It wasn't the fact that their premiums went up or that their limits decreased. It was that they didn't have enough time to prepare their board or their senior management for the changes that were coming down the road. So one of those cases where it's better to kind of get out ahead of it and start speaking with clients about it now, not waiting for the renewal to come up. The other issue I would say that's important is to start discussing with clients that their insurance program may very well change in the coming years. They may need to talk to them about maintaining less in terms of excess limits. They may need to budget for a layered insurance deal, which historically has been a little bit more expensive than dealing with one or two carriers. And in some cases, they may need to consider self-insurance or a high retention type program. So I would also ask agents to start speaking with their clients about gathering records. Record keeping from 10 or 15 years ago is a little lax, especially for a lot of human service providers. Now is the time to start trying to rebuild that information base, not when a claim comes in the door and everybody's scrambling to kind of figure out where they have their footing. Some of our larger clients right now are looking into cloud-based eternal record keeping, if you will. It may not help with the recent legislation opening the door to these 20 or 30-year-old abuse cases coming in now, but it certainly will help their position down the road.
And what is PHLY doing to help address the market challenges?
PHLY's one of the top 5 players in this human service insurance space. Last year we finished out the year at about $1.1 billion in written premium for just human service providers. We're looking to actually grow that segment in the coming years. The way that we plan to do it, however, is to judiciously apply the limits that we have available to us and to really scrutinize the particular exposures on a given risk. You know, we mentioned some of these difficult jurisdictional, legal jurisdictions such as Philadelphia, New York, California, most of the state, Los Angeles, Chicago, all the areas that we write a lot of business in have all become very difficult venues from a legislative perspective and also a jury verdict perspective. So we'll look at that a lot more closely going forward, along with the types of programs that our insureds provide, whether that's foster care and adoption type programs or just children's residential facilities, that sort of thing. All of that will factor into the availability of limits and the pricing that goes along with that. We currently have some of the best coverage forms in the industry to address these liability concerns, and our risk management staff is certainly amongst the best in the industry. They have all sorts of resources available to our clients to help them assess their enterprise risk management programs. And information on risk management and claims management is all available on our website at www.phly.com.
That was Paul Siragusa, Vice President of Underwriting for Philadelphia Insurance Company's Human Services Division. And I'm John Weber for Best Review Magazine.